What's going on, everyone? CryptoVatsik here with another TA video for you today. Nothing of what you're about to see is considered financial advice, and they're just my opinions. And if you enjoy this content, I would really appreciate it if you gave this video a like, and don't forget to subscribe to the channel. With that said, let's get right into it. Okay, today I'm going to be covering FET, and it's been a little while since my last video on it. We're going to start off here on the weekly time frame, and at the time of that previous video, we were trading right around here in these candles. So at the time of that video, this was that red zone, that resistance zone that we were attempting to break. And at the time I was leaning towards getting more of a correction before we pushed this high up here at just under 50 cents. Instead, we got some really tight consolidating price action on lower time frame. And clearly there was just enough demand for this crypto asset to smash right through resistance and push to that target at 50 cents. So although we didn't get the correction that I was hoping for, we did in fact end up coming and pushing that target. So it's just a great example of why you need to be flexible in your analysis. But with that said, now that resistance zone has been flipped in fact, and we have already swept that liquidity with this wick that we got here on the previous weekly candle. So clearly a ton of demand for this asset still, and showing huge relative strength. We are now well beyond the 200 exponential moving average. We've created a pretty wide gap between price action and that EMA. So this is a very powerful move. We do have a resistance block up here in red, and it derives from this prior high that we had back here last year. So you can see bearish order block candle invalidated right here, and then a second one actually in fact down here. So two levels that I was watching. The first one down here, which is right where we had that consolidation under resistance with this price action right here, that ultimately you wanted to see a break above that zone. So then the next one that we are battling now at this point just comes from that one up here that made our high. So my thesis at this point is I think it's pretty simple. If we break red, then my target is up here at 60 cents. We've already tagged it with this wick, so it would make sense to fill in some of this wick, but it's going to depend on some criteria here. So the fact that we've already swept this liquidity zone leads me to believe that this could push higher. If we did not have this wick down into this green zone, and all we had was the price action up here at this low, then I would be much more leaning towards a sweep of liquidity, that prior consolidation level, before we push back up and then target. However, like I said, since we've already swept it and had a major buyback on this wick with a continued push on the following week, it is definitely putting pressure on this resistance block. Now, the other thing that I'm liking is we have what looks to be a bull flag forming. We have a descending channel that is being respected on the weekly candle closes, meaning I am ignoring all the wicks, and it is quite symmetrical. It comes right after a leg up and looks primed for a breakout. We've got all this pressure on resistance building up, and we have already swept liquidity. So the criteria is there to push higher. And this target that I had there simply comes from the next previous high that we had. So we had this range form over here in January last year until we lost it and then had a bearish underside retest of that range low. So you can see it just like that. So essentially, if you took that range from the high down to the low, I essentially want to trade back inside of this range with the EQ and the range high, but first breaking that range low. Just another way of looking at it. Now, there's really no telling how high this pushes. I think all-time highs are eventually inevitable, but the question is, when are we going to have that reaccumulation phase? I don't quite think FET has seen that reaccumulation phase just yet. I think we've seen accumulation with a rally up, but I am suspicious of just this bull flag here being classified as a reaccumulation zone. And quite honestly, we are not that far away from all-time highs. At least on Binance here, the all-time high is sitting at about $1.20 with the actual weekly candle close all-time high at 90 cents. Like I said, FET has had major relative strength compared to the rest of the market. So as much as I like to see bullish price action, if we just continued to flip levels and essentially what is straight up, I don't necessarily love that. I would much prefer to see a break up, maybe test this next target, and then get a phase of reaccumulation and maybe even one more sweep of that liquidity zone into late 2023 to build up that reaccumulation phase off of our initial accumulation that will power up to smash the all-time highs. That's just the ideal scenario. I don't like predicting too far into the future, so I won't go into that further. But essentially what goes straight up must come straight down. So having a little bit more patience, waiting for the market to settle, waiting for that confidence to come back in. Let Bitcoin do its thing. Let it rally to 30, 40, 50K. and then the market can shift back into alts, as we've seen countless times in previous cycles. So anyways, like I said, that is the target if red breaks. So it's pretty simple in my mind. For now, on lower time frame, invalidation would just be these lows right here, which would be a break of the lows and a break of this bull flag. If we so happen to get that, then clearly at the very least, looking at this green liquidity zone for a potential wick fill here. And so I would say we either bounce from that point on, otherwise I think truthfully we're coming all the way back down to this level on account that we break green. Because at that point we would be toying with holding the 200 exponential moving average, and we'd be toying with this liquidity zone. Nothing in here tells me that it would bottom out and then bounce from that level, some random level in there. So it's just good to have options and plans for different scenarios. Scenario 1, zooming in on lower time frame, looking for longs in here on account that we break red, target up here. Scenario 2, resistance holds, we breach the bull flag, we breach the lows, we come to green, to this prior consolidation area that we had to break through. So essentially what is also just an SR flip. We hold green and we bounce from there, back up to resistance, consolidate again within this range for a push to the target. And then like I said, last scenario, worst case scenario, if all goes to shit, we lose green, we lose the 200 EMA, we lose the bull flag. Yeah, okay, we're heading down here. And it's the least likely scenario in my opinion, but I still gotta cover it. Okay, so I think that covers the high time frame. Now to drill into scenario A, let's drop down to the daily. So we did have an ascending wedge here forming previously, which after a big move like this, typically they break to the downside, as opposed to a descending wedge typically breaking to the upside. So that's fine. But at the moment, what I would like to see is, as I said, to break red. But how do you anticipate a break through red before it's too late? Well, you got to start drilling down into lower time frame first of all. You get your high time frame key levels, and then you drill into low time frame for the setup. I would like to see personally this previous support diagonal that we had here that was eventually lost, reclaimed. So we have the origin of the breakdown out of that diagonal right here. We have multiple attempts to hold it here. We broke down, we swept this liquidity zone. Now we've attempted to reclaim it with an initial failure, but already saw a decent buyback. So to see continued strength, I'd very much like to see consolidation underneath red for eventual breakout and entry on the retest. Scenario 2, if this just goes straight vertical, we smash through red quicker than anticipated, we reclaim this diagonal, then it'll demand a much more rapid response from you to get an entry. So it just depends how fast price action is going to develop. I don't feel super comfortable getting into a long position up here. I'd be much more comfortable getting in closer to this pivot level here, basically the mid-range area that we've now reclaimed. So that would provide a more optimal R&R in my opinion. And I could see this very well still coming down to that level, like I said, with some furthered consolidation underneath red for an eventual breakout and retest. But given the strength right now that it's displayed, who knows, this could just pump further and give very shallow retracements and make it difficult to jump into a long position. So let's drill into this further on the 4 hour. So let's take our range here from the range high down to the swing low. And again, I'm gonna mark out the quarter ranges at the 25 percentile regions. So we've got the range high, we've got the quarter range in the upper 50th percentile, we've got the EQ mid-range in the dashed line, next lower percentile quarter range, and then just our range low. Range low and range high forming from our swing high and swing lows. Fought to maintain the quarter range here for quite some time until we did lose it. And in fact, massive deviation back down to that liquidity zone underneath the range low until it was swiftly reclaimed on a new higher high market structure break in comparison to this lower high with a fresh high here and clean retest of the range low with acceptance above it. Now clearly you can just see this quarter range level fighting to reclaim it here, currently trading above it, which is also above the breakout origin right here that led to this drop. So like I said, preferably would get an opportunity to bid near the range low and get filled closer down to that structure. If this continues to vertically consolidate like this and push this high, then my revised bid zone would be the quarter range in here on account that we've clearly reclaimed it, but ultimately pushing all of these highs here at the range EQ for a break back above it and then targeting range high. So my high time frame invalidation like I said, is that green zone, the bottom of that wick that we had on the weekly chart. Otherwise, my lower time frame invalidations would be these areas, quarter range and range low. If you're trying to enter on a reclaim of the quarter range, that's your invalidation. And if you're trying to enter deeper, then your range lows and your invalidation. And if for some reason you're looking to short, then your asks should be in red somewhere or any kind of sweep above red, and SFP, clearly your invalidations above these highs. But I'm not interested in shorting this just given the relative strength that it's been displaying. Okay, I think that about wraps it up. FET is another one that I like long term. I do think it's going to perform well in the next cycle. And like I said, given the relative strength that it's showed compared to a lot of other altcoins in the market right now, is a sign of strength, and that's what you want to see pre-bull market, is things that get any sign of relief that they start to just run hard. So it looks good, looks great. I really hope you found something helpful in this video. I want to thank you again for joining. Let me know what you think in the comments. Please give that video a like if you did like it. And if you're new, don't forget to subscribe. As always, trade safely, trade objectively, and manage your risk. We'll catch you guys soon.